We just had the presidential inauguration on Monday. And, the big question is, what I'm thinking at least is how is it going to impact the market? Hey there, welcome back to the Flex Free Game channel. Here's where we're going to help you out with some information, some things that are going to move you along and being more successful in the stock market. And today we're going to be diving into a topic. We just had the presidential inauguration on Monday. And, the big question is, what I'm thinking at least is how is it going to impact the market, right? How is it going to impact my portfolio? What should I be looking out for? And whether you're a beginner or whether you've been in the market for a while, we're going to have something for you in this video today. So let's go ahead and jump in and get started. So the first thing I want to talk about is more of the short-term impact of a presidential inauguration. So historically, the market tends to show increased volatility when we have, an inauguration. Basically, because we have a few things that people are going to be looking at, investors. One is going to be policy uncertainty, right? So investors often react to uncertainty around the stock market. We talk about this all the time. When there's an uncertainty in the market, we'll see a lot of volatility. People are not sure what they're doing, and people don't know what decisions to make. So we'll see that volatility play out in the market. And during a presidential inauguration, shortly after the president takes his office, there could be some things that drive uncertainty around, what their policies are going to be, how that might impact the market, how it might impact the economy overall. So we can see that play out in the market. And that's one thing to be looking out for. The second thing could be sector rotation, right? So certain industries may benefit or suffer depending on the incoming administration and some of the decisions they make. So for instance, let's say a president focuses on renewable energy. This could boost green energy stocks, while other traditional energy stocks might suffer from that. So those are some things we need to pay attention to as well. And then the last thing is market sentiment, right? So how do people feel about the market? How do they feel about the new president coming in? How their policies and things that they're going to do is going to impact the market, and really that sentiment around it, and how people are going to trade and invest based on how they feel. So all these things can impact the market on the short term when a new president comes in office. So those are things we got to make sure we're taking or paying attention to as they come in, and really just consider the market reactions. And if we look at past elections, in say 2021, the market showed optimism after Joe Biden's inauguration, driven by expectations of large-scale stimulus and infrastructure spending. So those are some things that people were excited about back when Biden became president. Now we have Trump coming in, and we'll see how that plays on the market as well. So the next thing I want to talk about when it comes to the market is the long-term impact, and how that's going to kind of affect the market on the long term, right? So one thing we can look at when we're looking at long term is, again, economic policies, a president's approach to taxes, spending on regulation, and different things like that. For instance, one policy like tax cuts could spur market growth, as seen during the Trump administration last time. So if he plans on doing something similar, we may see some growth off that. We can look at Federal Reserve interactions as well, how the policy will affect, goes hand in hand with kind of what our Federal Reserve is doing in monetary policy. For instance, if a president pushes for significant government spending, the Fed might adjust interest rates to balance the inflation risk. So we got to pay attention to that. We know inflation has been a big thing recently in the market, and we've been, kind of waiting for the Fed every time he's going to make an announcement to see how that's going to play in the market. So we're going to continue to pay attention to that long term and see, how the administration's policies impact that. We can also look at trade and global relations. So, the trade policies have different impact on companies within global operations. For instance, tariffs and trade wars can, hurt reliant sectors on import and exports. Now, we know Trump has been talking a lot about tariffs. I see that in the news a lot. So we want to pay attention to that, how it's going to impact the market, how it's going to impact some of our, relations globally, and what the trading is like with goods coming in and out of the country. So we want to pay attention to that. And then lastly, historical trends, right? Over the past century, over the past 100 years, the stock market has trended to grow under any administration. So regardless of the party, we've got Democrat, Republican coming in. It matters more about the broader economic environment and the global factors, and that big one again, investor sentiment, right? So we've seen the trends. The market continues to rise pretty much whoever's been in office. We may see some volatility. We may see some short-term, turns, but for the most part, for making good decisions, and we're continuing to do the research like we talk about all the time, we can invest in solid companies that should grow over time. So the last thing I want to talk about is, what can retail traders like you and I do to prepare ourselves and really to thrive in this environment no matter what happens. So the first thing is diversify your portfolio. I know you hear this all the time, and making sure that you have your money spread out. We're not just going in one sector, one stock. But I would say take that a step further. One thing that I always talk about is really understand what you're investing in, really know the story of the companies you're investing in, understand how they make money, how they're going to continue to make money, how they're going to thrive in the different sectors that they're in. And that way you can stay on top of what's going on. Also, take a look at that top line revenue, right? The top line revenue is going to drive that stock price. So make sure you're plugging into that, and also pay attention to earnings, right? What are they doing in terms of the revenue they're bringing in? And also what guidance are they giving on what they're going to do in the future? So if you pay attention to that and use those data points to help diversify your portfolio, that's going to put you in a good place. Second thing is pay attention to policy trends. So understand which sectors can benefit or suffer from the different policies that are put in place. I touched on one example earlier, but if we continue to pay attention to that, we can kind of be out in front of things that should go up and things that should go down, and you can make your decisions based on that. Also, you want to keep an eye on the Federal Reserve. I can't continue, say this enough. As we continue to move forward, inflation is going to be a big part of what is going on in our economy. We want to see how that shapes what's going on, and also what happens to interest rates and how that's going to impact the market. So make sure you're paying attention to that. One thing that you can also do, instead of trying to time the market, is use more of a dollar cost averaging approach. So there's one thing I tell people all the time, like, I have no idea what the market's going to do on a day-to-day basis. I don't know if the market's going to go up or down, and I can't control it. All I can do is take the information that's given to me, see what the trends are in the market, and go in and take an approach that's going to take advantage of what I see in the market. And one thing, if you're investing, instead of trying to time the market and be perfect, you can use more of a dollar cost averaging. We also like to use buy signals. There's some different things. You can use the moving averages. We talk about those in our program. So all different ways to enter the market using some data points like I talked about before, instead of just trying to time it and guess right. So last thing is stay informed and avoid panic, right? Like I said just a few minutes ago, we cannot control what the market does. All we can do is take advantage of the different directions that the market is going. So make sure that anytime you're trading, investing, making decisions on where you want to put your money, you're making informed decisions. Let the data make your decisions for you, right? Trade things that, if you're investing long term, make sure that you're seeing the charts are in an upward path on the short term, long term, mid-term charts. We want to make sure that top line revenue is growing. Make those types of decisions and pay attention to what's going on. Always be informed. Let the data help you with making your decisions, and you're going to be in a good place. And if you need help with that, check out the link below. We have some opportunities to set up coaching calls, where Courtney and I will go over that stuff with you, kind of tell you what we do within the Flex Financial approach. And lastly, if this helps you out, you like what you're hearing on the calls here today, go ahead and hit that like button, hit the subscribe button, check out our upcoming videos, and let us know what you think about the presidential inauguration and what's going to happen in the market. So we'll see you on the next one. Talk to you soon.